In the spring of 2025, a curious scene unfolded at a car showroom in Shanghai. A Toyota dealership, once buzzing with buyers eager for reliable Camrys and Corollas, now sat nearly empty on a weekend afternoon. Just down the road, a BYD outlet teemed with energy, packed with curious shoppers examining the latest electric SUVs and sedans. This stark contrast captures a dramatic shift in the world's largest auto market. Once a symbol of automotive excellence and pragmatism, Toyota is suddenly struggling to excite Chinese car buyers. How did it come to this? How did Toyota, famed for its pioneering hybrids and bulletproof reliability, find itself lagging behind in China's electric vehicle boom? This is the central conundrum. A company that long bet on hybrid efficiency now faces an identity crisis in the very market that's racing fastest toward an electric future. To understand Toyota's losing battle in China, we need to explore the story behind their strategy, the whirlwind changes in China's EV landscape, and the hard lessons being learned in real time. Toyota's modern reputation was built on what you might call the hybrid bet. Over 2 decades ago, Toyota introduced the Prius, the world's first mass-market hybrid electric vehicle, HEV. At the time, it was a revolutionary compromise between gasoline and electric, a car that could sip fuel and cut emissions without relying on charging stations. This pragmatic approach wasn't just a one-hit wonder, it became a core philosophy. Toyota doubled down on hybrids, refining the technology and rolling it out across their lineup. By the 2010s, Toyota was the undisputed global leader in hybrid cars, selling millions of them and establishing a green image without ever plugging into a wall. This hybrid strategy was deeply rooted in Toyota's view of the world. For years, the company's leadership, most notably former CEO and current chairman Akio Toyoda, preached a multi-pathway approach to clean vehicles. While many rivals announced all-electric futures, Toyota insisted that hybrids, and even hydrogen fuel cell vehicles, were a smarter bridge to a low-emission world. In fact, as recently as early 2024, Toyota publicly predicted that battery electric vehicles, BEVs, might only make up about 30% of global car sales in the long run. The implicit message: don't put all your eggs in the EV basket just yet. And for a while, that stance seemed justified. Toyota's hybrids were selling strongly worldwide, and the profits from these tried-and-true models funded the company's engineering prowess. Hybrids gave Toyota a green credibility with consumers and regulators, without the risks of diving headlong into unproven battery technology. Even as competitors like Volkswagen and General Motors announced big EV plans, Toyota remained confident that its gradual approach was more sensible. After all, why rush into pure electrics, with their high costs and charging infrastructure needs, when hybrids were a reliable cash cow? By the late 2010s and early 2020s, Toyota's bet on hybrids had cemented its status as the world's top automaker. In markets like North America and Japan, popular models, the RAV4, Camry, Corolla, and Lexus SUVs, all offered hybrid versions that flew off the lots. Consumers loved the fuel savings and Toyota's famed durability. Regulators, especially in places like the US, gave credit to hybrids for lowering emissions. From Toyota's perspective, the strategy wasn't just working, it was winning. The company was able to claim it was doing its part for the environment while also maintaining healthy profit margins. In 2021, Toyota sold nearly 2 million vehicles in China alone, mostly gas and hybrid models, marking its 9th consecutive year of record sales there. The hybrid bet, it seemed, was paying dividends globally, including in China. Yet, beneath the surface, trouble was brewing. Toyota's success with hybrids may have inadvertently bred a sense of complacency when it came to fully electric cars. While Toyota iterated on hybrids, a quiet revolution was gathering speed elsewhere, especially in China. The danger of betting big on one technology is that you can be blindsided by another. Toyota, so proud of its methodical wait-and-see approach, was about to get a rude awakening in the market of the future. No market on Earth embraced the electric vehicle revolution faster or more fervently than China. What has happened in China from roughly 2020 to 2025 can only be described as an EV shockwave, a sudden and overwhelming surge that transformed the auto industry landscape. For global automakers used to a slower pace, this felt like a seismic jolt. And for Toyota, it was like the ground shifting beneath its feet. A big part of this shockwave was set in motion by deliberate policy and hefty investment. Over the past decade, the Chinese government poured staggering sums, well over $100 billion in various subsidies and incentives, into jump-starting the EV market. National subsidies, local subsidies, tax breaks, research grants, you name it. Officials used every tool available to make electric cars affordable and plentiful. In major cities like Shanghai and Shenzhen, regulators offered coveted perks to EV buyers, such as free license plates, a waiver worth thousands of dollars, and exemption from strict registration quotas. The result? For many Chinese consumers, buying an electric car suddenly made more financial sense than sticking with gasoline. The numbers tell the story. In 2015, electric vehicles were a rarity in China, a tiny fraction of new sales. Fast forward to 2023, and EVs, including plug-in hybrids, made up roughly 30% of all new cars sold in China. By 2024, China alone was buying over 10 million electric cars a year, accounting for more than half of global EV sales. In other words, China didn't just catch up to the EV trend, it became the undeniable epicenter of it. What shocked outsiders was not just the scale, but the speed. Entire years of gradual EV adoption in Europe or the US were happening in China in a matter of months. Government mandates pushed automakers to produce new energy vehicles, and consumers, aided by incentives and a wave of appealing models, responded with enthusiasm. This breakneck growth was a boon for homegrown Chinese brands. Companies that many outside China had barely heard of a few years prior suddenly became electric juggernauts. The most famous is BYD, Build Your Dreams, which transitioned from a battery maker and niche automaker into an EV powerhouse. By 2022, BYD surged past Volkswagen to become the best-selling car brand in China, and by 2023, it was selling on the order of 1.8 to 2 million new energy vehicles annually, a mix of pure electrics and plug-in hybrids, in the Chinese market. Brands like NIO, XPeng, Li Auto, Chery, Geely, and GAC's Ion division also rode the wave, each carving out a piece of the burgeoning market with their own electric offerings. Foreign automakers, meanwhile, found themselves wrong-footed. Companies like Volkswagen, General Motors, and Toyota, long dominant in China with traditional cars, suddenly saw their market shares erode. They were still making and selling millions of internal combustion and hybrid cars, but Chinese consumers were increasingly looking for the latest electric models, many of which the foreign giants didn't have ready. By 2024, foreign brands had collectively lost about a quarter of their market share in China, compared to just a few years prior, a stunning reversal after decades of growth. The term joint venture, once the golden ticket for Western automakers in China, started to sound more like an anchor than a sail, as their Chinese JV partners and upstart local rivals rapidly shifted to electrics. For Toyota, the shockwave was particularly jolting. China's EV push undermined one of Toyota's key strengths, its hybrids. In China's policy framework, conventional hybrids don't qualify as new energy vehicles, NEVs. They are essentially treated like regular gasoline cars. That meant Toyota's best-selling hybrids gained no special advantages. They didn't help Toyota earn government NEV credits, and buyers of a Toyota hybrid got no exemption from things like license plate lotteries or road restrictions in big cities. So while Toyota was still touting hybrid efficiency, a Chinese buyer could get a fully electric or plug-in car, sometimes at a similar price, with big subsidies or perks, and enjoy fuel-free driving plus regulatory benefits. The playing field was tilted, intentionally, to favor plug-in cars over non-plug hybrids. Toyota's once pragmatic bet now looked increasingly like a liability in China. The EV shockwave was not just about government largesse, it was also about the feverish pace of innovation and competition among Chinese automakers. The market became a Darwinian arena, with dozens of brands and hundreds of new models vying for attention. Rapid iteration became the norm. New EV models were launching every few months, each boasting a longer range or a smarter feature than the last. Chinese automakers began to operate more like consumer electronics firms, implementing a move fast and break things ethos that was unheard of in the traditionally cautious car industry. Development cycles that took 5 years in Japan or Germany were compressed to 2 or 3 years in China. Features that might be considered too experimental elsewhere were quickly rolled out to market. Sometimes there were mistakes, but the attitude was that it's better to risk it and fix it later than to fall behind. For a methodical company like Toyota, this environment was dizzying. By 2023, Chinese EV makers had triggered a price war in the market, slashing prices to grab share and clear inventory. Tesla, the one US player with significant China presence, cut prices on its Shanghai-made Model Y and Model 3, and local brands followed suit. Suddenly, the price gap between a well-equipped electric car and a comparable Toyota sedan narrowed dramatically. In some cases, a Chinese EV was even cheaper than a similar-sized Toyota gas model, especially after subsidies. Toyota's leadership in Beijing and Toyota City, in Japan, saw these trends unfolding and realized they were behind the curve. What they perhaps underestimated was just how far behind they truly were. In China's ultra-competitive car market, being slow or being uncool can each be a problem. Unfortunately for Toyota, it was getting tagged as both. The company that once set the standard for innovation, with hybrids, and brand appeal, with its reputation for quality, was now, in the eyes of many Chinese consumers, starting to look outdated. A blunt way to put it, by mid-2020s, a growing cohort of tech-savvy Chinese car buyers saw Toyota's offerings as slow to evolve and frankly unexciting compared to the shiny new electric alternatives. One aspect of slow is literal product development speed. Toyota's traditional vehicle development cycle, often 4 to 5 years of painstaking design, prototyping and testing, suddenly looked glacial next to the sprint pace of Chinese EV startups. As an example, during Toyota's joint venture project to create an electric sedan for China, the Toyota BZ3, co-developed with BYD, Toyota engineers were reportedly astonished at how quickly their Chinese counterparts could implement changes. BYD's engineering culture embraced last-minute tweaks and rapid problem-solving. They would make a major design alteration in weeks, something that might take Toyota months of deliberation. To the Toyota veterans, used to meticulous refinement, this breakneck style felt almost heretical, but it delivered results on schedule. Chinese EV makers were simply bringing new models to market faster than companies like Toyota could keep up with. The other aspect of slow is about technology adoption. Modern electric cars are as much rolling computers as they are vehicles. Chinese consumers in the market for EVs tend to be younger and more tech-oriented. They expect their cars to have the latest gadgets, software features, and autonomous driving capabilities. Here, too, Toyota lagged. Features that were becoming standard in Chinese brands, things like large touchscreens with slick infotainment, over-the-air software updates, voice-activated controls tailored to Mandarin, and advanced driver assist systems, were not Toyota's strong suit. Toyota had focused on powertrain reliability and fuel efficiency for so long that it was somewhat late to the party on high-tech cockpits and software-driven innovation. In China, some critics described Toyota's user interface and connectivity as behind the times. The joke was that buying a new Chinese EV felt like getting a smartphone on wheels, whereas buying a Toyota felt like getting your dad's dependable old Nokia, sturdy, but not exactly cutting edge. Then there's the uncool factor, which is arguably even more dangerous in a trend-conscious market. In the 2000s, owning a foreign-branded car in China, like a Toyota, was a status symbol, a mark of quality. But by the mid-2020s, that cachet was fading. Domestic brands like NIO and XPeng cultivated sleek, modern brand images, positioning themselves as tech leaders and lifestyle trendsetters. Walk into a NIO house, NIO's combined showroom and clubhouse, in a Chinese city, and you'd see trendy decor, a coffee bar, and young families lounging. The brand experience feels aspirational and high-tech. Meanwhile, a typical Toyota dealership remained a no-frills place to buy a car for practical reasons. For younger Chinese consumers, practicality alone is no longer enough. The car needs to make a statement. Toyota's designs, while gradually evolving, also struggled to wow this new audience. Take Toyota's first global electric SUV, the BZ4X, sold in China as the Boji 4X. When it launched, it was met with a bit of a shrug. Its design was not particularly radical or futuristic compared to rival EVs. More embarrassingly, the BZ4X had a well-publicized recall soon after launch due to wheels that could potentially fall off, a fiasco that did not inspire confidence in Toyota's EV competence. Chinese media and consumers took note of such missteps. Toyota's other electric offering, the BZ3 sedan, was more competitive thanks to heavy involvement from BYD, which supplied the battery and co-developed the platform. The BZ3 was reasonably priced and decent in performance, yet even it lived somewhat in the shadow of domestic hits like the BYD Chin Plus or XPeng P7. A vivid example of Toyota's challenge was in the mid-size sedan segment by 2024. The Toyota Camry had been a long-time favorite for its efficiency and comfort. But when BYD launched the Chin Plus DMI, a plug-in hybrid sedan, it hit the Camry hard. The Chin Plus offered up to 100 kilometers of electric driving on a charge, a high-tech interior, and quick acceleration, all for a price significantly lower than a base Camry. And because it was a plug-in, it qualified for the green perks and didn't require a license plate auction in places like Shanghai. Consumers flocked to it. In 2023, the new Camry generation landed in China and saw disappointing sales. Orders in its first 2 months were only about 1/3 of what the previous gen managed in the same period. Meanwhile, BYD's Chin, and later the updated Chin L sedan, sold in the hundreds of thousands, effectively dethroning the Camry as the go-to affordable family sedan in China. The message was clear. Being a hybrid and a Toyota was no longer enough to impress Chinese buyers. Even beyond BYD, nearly every segment of Toyota's portfolio in China came under siege. Compact SUVs like the RAV4 faced off against a growing lineup of Chinese electric crossovers sporting flamboyant styling and multiple screens. Family MPVs and vans, a niche Toyota once had some success in, saw newcomers from brands like Li Auto that offered extended-range EV tech and luxurious amenities. And in the off-road SUV niche, where Toyota's Prado and Land Cruiser have a legendary reputation, local brands began introducing advanced hybrids and EV off-roaders that appealed to a new generation of adventure seekers with an eye for tech. To sum up Toyota's slow and uncool problem, the company was perceived as moving cautiously in a market that had learned to favor speed, and as prioritizing tried-and-true formulas when consumers were craving novelty and innovation. Toyota hadn't lost its fundamental strengths. It still built very reliable cars. But in the Chinese market around 2025, reliability and fuel efficiency had become expected baseline qualities, not differentiators. The differentiators had shifted to software, electrification, and design flair. And on those fronts, Toyota found itself playing catch-up to Chinese competitors who, only a few years prior, would have been considered the underdogs. Recognizing the gravity of the situation, Toyota has entered full scramble mode in China. A company famous for deliberate moves is now hastily trying new strategies as if making up for lost time. The past 2 years have seen more shifts in Toyota's approach to the Chinese market than perhaps the previous 20. It's a multi-front effort: new leadership, new partnerships, new products, and a new mindset, or so Toyota hopes. One of the first signs of change was in leadership. In 2023, Toyota globally transitioned to a new CEO, Koji Sato, who signaled a greater emphasis on electrification. In China specifically, Toyota did something unprecedented. It appointed its first-ever Chinese general manager to lead operations. This was more than symbolic. By early 2025, multiple high-level personnel changes were underway in Toyota's China division, bringing in fresh perspectives and local expertise. The message was clear. The old way of doing things wasn't cutting it, and Toyota was willing to shake up its hierarchy, even entrusting Chinese executives and younger engineers with bigger responsibilities. The company hoped that local leadership would be more in tune with Chinese consumer trends and would move decisively to address them. At a strategic level, Toyota began streamlining its product lineup and joint venture strategy. Traditionally, Toyota operated two parallel joint ventures in China, one with FAW and one with GAC, often selling very similar models under different names. This twin model strategy led to internal competition. For example, GAC Toyota might sell the Levin, while FAW Toyota sells a nearly identical Corolla, each through separate dealer networks. In a shrinking market, such duplication was hurting more than helping, effectively pitting Toyota against itself. So Toyota started discussing ways to consolidate models and coordinate sales between the two joint ventures. The idea floated was, if a model is essentially the same car, maybe have one version and let both JV networks sell it, rather than splitting resources. This is easier said than done, due to separate factories and entrenched dealer interests. But the fact that Toyota is even considering reorganizing its sacred joint venture structure shows how urgent the situation has become. Perhaps the most visible adaptation has come in the product arena, especially in electric vehicles and plug-in hybrids. After lagging, Toyota is now racing to launch EV models tailored to China. Their first efforts were the Toyota BZ4X, an electric SUV, and the BZ3, an electric sedan, and feedback from the market led to rapid tweaks. The BZ4X, which had a troubled global launch, was upgraded and rebranded slightly for China, earning a local nickname Boji 4X to address concerns. The BZ3 sedan, developed jointly with BYD's technology, actually found a modest foothold. By mid-2024, it was averaging around 5,000 units a month in sales. Sensing an opportunity, Toyota is expanding the lineup. They've unveiled a BZ3X, an SUV variant, and are planning a new BZ3C, a crossover coupe-style EV aimed squarely at popular segments. These vehicles are notably incorporating a lot of Chinese tech. For instance, they feature BYD's advanced LFP batteries, famed for safety and low cost, and even BYD-sourced electric motors. In higher trims, Toyota's new EVs in China come equipped with features like LiDAR sensors, Qualcomm and NVIDIA-powered infotainment and driver assist chips, and software from local partners like Momenta. It's a remarkable pivot, Toyota leaning on Chinese suppliers and know-how to make its cars more appealing. Beyond pure electrics, Toyota is also reinforcing its presence in the plug-in hybrid PHEV space in China. Remember, Toyota's standard hybrids don't count as NEVs in China, but plug-ins do. So, Toyota is developing more powerful plug-in versions of models like the RAV4 and Corolla. It even invested in researching range extender systems, similar to what Chinese startup Li Auto uses, where a small gasoline engine acts purely as a generator for an otherwise electric drivetrain. In essence, Toyota is saying, if Chinese consumers want battery range, we'll give them range, even if it means fundamentally re-engineering our best-selling models for this market. The scramble has also led Toyota to seek outside help in areas it traditionally guarded closely. An example is Toyota's flirtation with Huawei, a Chinese tech giant known for its telecommunications and increasingly, its smart vehicle systems. In late 2024, Toyota began discussions and small partnerships to use Huawei's connectivity and possibly autonomous driving tech in Toyota cars. This is a significant cultural shift. Toyota historically kept technology in-house as much as possible to ensure quality. But to appeal to Chinese buyers, having a familiar interface like Huawei's Harmony OS infotainment or advanced driver aids might make a big difference. If you can't beat the local tech, why not join it? Another adaptation is pricing strategy. As highlighted earlier, Toyota resorted to price cuts on traditional models to maintain volume. By 2024, one could buy a new Camry in China for under 140,000 renminbi, under $20,000, down from its original price, well above $23,000. Such cuts were necessary to compete with cheaper domestic offerings, but they've squeezed Toyota's dealers hard. Some dealers reportedly ended up selling at a loss, hoping to recoup via manufacturer rebates. Toyota knows that's not sustainable long-term. It needs to offer competitive products, not just cheaper ones. Still, in the short term, slashing prices was one of the few levers it could pull to keep sales going. To ensure it doesn't remain on the back foot, Toyota is also investing heavily in local R&D. The company opened a new intelligent electrified vehicle R&D center in China, aiming to design cars in China, for China more than ever before. By developing vehicles locally, from the concept stage, with Chinese engineers, Toyota hopes to shorten development cycles and better align with fast-changing consumer tastes. The goal is to avoid the scenario where a car designed for American or Japanese buyers is just retrofitted for China. Instead, design it from scratch with Chinese expectations in mind. If that means a car needs selfie cameras and in-car karaoke to appeal to buyers, features some Chinese EVs boast, Toyota's new China R&D hub should, in theory, know that and plan for it. All these efforts underscore an important point. Toyota is not passively accepting defeat. Far from it, the company is leveraging its immense resources to engineer a comeback in China. It's even publicly stated ambitious targets. Toyota wants to increase its annual China production to around 2.5 to 3 million vehicles by 2030, up from about 1.8 million in the early 2020s. That would be an 80% jump, implying they believe they can grow again by embracing electrification and whatever else it takes. Whether Toyota's scramble will succeed remains an open question. It's a little like watching a big ship try to change course rapidly. It can be done, but not without stress on the hull. The next few years will test Toyota's adaptability like never before. And even as it fights to remain relevant in China, the broader context of the EV revolution raises questions that go beyond just one company.